Is the mortgage with the lowest rate your best option? Welcome to Tea at Taxevity, where you get insights from insiders. I'm Pramod Sharma, your actuary at Taxevity Insurance. When I'm not being interviewed or doing interviews, I am busy helping people transfer financial risks with life and health insurance. We have a special guest today. Who are you and what do you do when you're not being interviewed?
Hi, Pramod. Thanks so much for having me. My name's Sean Cooper. I'm author of the book Burn Your Mortgage. I'm known for burning my mortgage at age 30, and now I'm an independent mortgage broker helping Canadians save money with their mortgages.
Mhm. You're a popular guest. This will be the third time that you're on our show. The first time you were busy burning your mortgage. The second time you had burned your mortgage, and now you're helping people with mortgages. So it's interesting to see how your career has changed. Now, where are you located?
I'm located in Toronto, but I help people with mortgages all across the country.
Okay, terrific. So we are talking about mortgages. When we had a mortgage some years ago, we wanted the lowest rate. Most people probably do. And we went to a mortgage broker because we figured that was the way that we could do comparison shopping. And it was also important for us to learn because mortgages were something that we weren't experts on. Besides the rate, what else should borrowers consider?
Yeah, that's a great point, Pramod, because a lot of people, when looking for a mortgage, all they care about is the lowest rate. But as I like to say to my clients, the lowest rate can help save you hundreds, but the wrong mortgage product can cost you thousands. So, in terms of the other things that you should care about, I have something that I use with my clients. I call it the three mortgage P's. So, it stands for prepayments, penalties, and portability. And those are things that matter perhaps later on in your mortgage, but they may not be top of mind when you're initially looking. So that's why it's a good idea to work with a trusted mortgage broker who can ask the appropriate questions and find out whether these things are important to you. You may not know initially if they are, but when a good mortgage broker asks the questions about your short-term and long-term plans, then they can kind of probe and figure out, maybe having a mortgage with lower penalties is important because you might end up breaking it later on. So that's why it's key to work with a broker that knows to ask these questions.
Yeah, you make really good points because we certainly didn't know much besides picking a low rate. And then the mortgage broker helped us understand that, hey, what about this? What about that? Things that we never would have figured out if we were just comparing rates on our own. So it's good that you're able to ask those questions for people. So let's talk about the three P's. The first one I think you said was prepayments. Why are those important?
So it depends on what your goals are with your mortgage. So if you'd like to have a mortgage burning party like me and pay off your mortgage sooner rather than later, then definitely having good prepayments matter, because if you have a lot of extra money and the prepayments are really restrictive, like some lenders only let you make a lump sum payment once a year on your anniversary date. I mean, that's not really super helpful. If you're somebody where you'll have extra money, you have a side hustle, for example, you do Airbnb or do Uber in your spare time, then you might want to put that extra money against your mortgage. So if that's important for you, then definitely look for a lender with flexible prepayments. And again, a good mortgage broker can ask those questions and find out whether it's important or not. But as an assumption that I get from many of my clients, they just assume that all lenders have the same prepayments, when that's definitely not the case. Some lenders have 10-10 prepayment, which basically means you can make a 10% lump sum payment and increase your regular mortgage payment by 10% a year. So some lenders have that, others have 15-15, and other lenders have 20-20 prepayments. So yeah, if that's an important feature to have, then definitely look for a lender who has good prepayments. Now, a funny thing in terms of if you look at the stats in terms of prepayments, a lot of Canadians, they want really great prepayments, but then they don't actually end up using them. So, I mean, typically lenders just offer whatever their prepayment is, and you're not paying a premium in terms of the mortgage rate. But, you know, people just kind of, I guess, like that flexibility. So bottom line is not all lenders and products have the same prepayment. So if that's something important to you, then look for a lender with a mortgage product that has great prepayments such as 2020 prepayments.
Right. We didn't think that prepayments would really matter because when we got a mortgage, it was using up most of our money anyway. So we didn't know where we'd have extra money. But then there was extra money like bonuses and other things. And so we were
Exactly.
happy that our mortgage broker had told us to get a mortgage that had decent prepayment. It was a lot more than we ever put in, but it was good to know that we had that option and didn't have all the restrictions that some of the other mortgages had. Now,
Exactly.
penalties is another one of your P's. What do you want to tell us about penalties?
Sure. So the sad reality of the situation is penalties is something that you only think about later on when life happens and you have to break your mortgage. So for example, you could get a job promotion and decide to move across the country and you want to, like, let's say I had a friend where she was living in London, Ontario, and she got a job promotion in like got a job opportunity as a nurse in Vancouver, and she just wanted to rent for the first while, so she couldn't port her mortgage. And she owned her property and she was renting it to tenants, but she basically was stuck holding onto the property for another 2 years because she didn't want to have to pay the costly penalties. So yeah, penalty can really, change perhaps the decisions you might make in life. Like you could get a job opportunity across the country or even in another country, and then you find out what your penalty is, and it's tens of thousands of dollars, and then it might make you reconsider that opportunity. So certainly it's better to ask upfront what the mortgage penalty is, because it's better than being blindsided later on. The sad reality is most of my clients who I've spoken to and they've owned several properties throughout their lifetime, they've been burned by the mortgage penalty at least once. So with my clients, I'd rather let them know upfront about the mortgage penalty rather than them learning about it the hard way by getting burned. So in terms of the mortgage penalty, there's two main types of mortgages. There's fixed and variable. Now, with the fixed rate mortgage, it typically has the higher mortgage penalty. Now, variable rate, the mortgage penalty is typically just 3 months interest. So the advantage of that is that you know what your mortgage rates, your mortgage penalty is going to be um, in advance of breaking it. I mean, it's not a big mystery, but with the fixed rate, especially with the big banks, they use a calculation known as the interest rate differential, or IRD. So they use the greater of the IRD, or 3 months interest. And if mortgage rates have changed a lot since you initially signed up, or even if they've stayed the same, you could face a very big mortgage penalty in the tens of thousands of dollars, because because nobody actually really signs up for the posted rate with a lender. But the sad reality of the situation is that they actually use the posted rate when you break your mortgage to calculate your penalties. So that's how you can really end up with these huge mortgage penalties. And if you type in Google and look at some stories with people paying ginormous mortgage penalties, it's more than likely as a result of the IRDs. So for my clients, I like educating them in advance so that they know about these mortgage penalties. And I like to ask them, do you think there's a chance that you could have to break your mortgage? Like, what do you think are the chances of that happening? And if they think that there's a reasonable chance, or if they just want the flexibility, then they might choose to go with variable rate. But I kind of like giving them that information in advance so that they're not blindsided with it later on, and learning through experience of having to pay that $10,000 penalty or more.
Yeah, we didn't, when we had a mortgage, we didn't think that penalties would be that relevant because your final P is portability. And we thought we had a portable mortgage. So we figured that if we moved from where we were to a more expensive place, then our mortgage would come with us and there wouldn't be any penalties. Like, I don't know if that's the case or not, but can you tell us about portability, your third P?
Sure. And just further to your point earlier, you don't necessarily have to move to another property in order to do the portability. Like, to trigger the penalty, you could actually decide to refinance your mortgage. Like, let's say that you ended up getting some extra consumer debt and you wanted to roll it into your mortgage before the end of the term, then you could face a mortgage penalty at that point in time. So just wanted to be clear, it's not just moving or selling your property. If you want to refinance, you could face the penalty there. So just wanted to be clear about that.
Okay.
But in terms of your point about portability, now when people hear that their mortgage is portable, they think, oh, it's a slam dunk, it's 100% guaranteed. But it's important to note that it's portable upon approval of the lender. So chances are the lender would say yes, but there's always the odd chance that they could say no. And in that instance, then you'd be stuck paying the mortgage penalty. And if you're with a lender that charges a high mortgage penalty, like with a fixed rate mortgage, then you could really face a high mortgage penalty. So it's just important to remember that, portability isn't necessarily guaranteed. So if you think that there's a chance that you could sell your property, then it probably makes sense to sign up for a mortgage with a lower penalty, just as a backup in case the lender doesn't say yes to the mortgage port when you apply for it. And also, porting your mortgage kind of puts you under pressure as well, because you have to buy and sell a property within a certain window of time. Like you might have only 90 or 120 days to get this all done. And, I don't know about you, Promo, but I don't really want to have, a tight timeline where I need to buy and sell like that. I mean, that's a ton of pressure. So, it's just better to have that backup option where at least if you have to break your mortgage, you don't get stuck buying a property you don't necessarily want. And it just kind of puts a bit less pressure on you at that point in time.
Great points. Is there something else you'd like us to know before we wrap up?
Yeah, I just wanted to, when you go and work with, the bank, that's a good first stop. But the issue with working with the bank is that you really have to look out for yourself. So, when you go to the bank and apply for a mortgage, they'll tell you about all the benefits of the mortgage, but they're not going to go into the mortgage penalties. I mean, they'll perhaps talk about the prepayments, but you really have to look out for yourself. So that's really the advantage of working with a trusted mortgage broker like myself, an independent mortgage broker, because I shop the market on your behalf, and I'm truly unbiased. I mean, in some cases, I'll tell my clients point blank it makes sense to stay with their lender because they're getting great rate and I won't get paid anything on that. But I really rely on positive word of mouth referrals. So I believe that, I believe in karma, and I believe that by doing right for my clients, then, they'll naturally want to mention me to any friends and family that may need mortgage advice. So, by working with an independent mortgage broker, you can really get that great unbiased advice that you need. And yeah, you can hear the pros and cons of each product and really get signed up for the best mortgage product for you at that point in time. So that's why I'm a big fan of mortgage brokers, and that's why I decided to become one myself.
Yes, we originally, when we had a mortgage, we originally went to the bank, and we didn't feel that we were getting very good information. And we also knew that there was a posted rate and there were lower rates that people actually paid, but we had no idea what rate we could get. And without going to a mortgage broker, we wouldn't have been able to do comparisons and get answers to questions that we didn't even know that we should have had. So it was a good experience for us. Now, what's the best way for people to reach you?
Yeah, thanks so much for having me promote. It's great to be back on your show. So the best way to reach me is you could visit my website, burnyourmortgage.ca. You could also email me, Sean, SEAN, at burnyourmortgage.ca, as well as you can phone or text me at 647-867-3711.
Okay, thanks very much, Sean. Mortgages are really important to Canadians, and you've helped us understand them better.
Well, my pleasure. Thanks so much for having me back, Pramod.
Okay, we'll see you later. Bye.
Bye.